And for his take on the state of the U.S. housing market, we're joined by Pej Barlavi, CEO of Barlavi Realty. Pej, good to have you back on the show.
Thank you for having me again.
So, Pej, we're getting some positive indications when we look at this foreclosure data and a trend showing a significant decline. In your experience with your realty exposure, are you seeing that?
Definitely. We're not seeing as much foreclosures. The list that we get every couple of days is shrinking almost every day.
And you see that as a sustainable trend?
I hope so. I do see it. It's been ongoing like this for several months, at least in my perspective, so hopefully it continues on.
Well, one of the issues we just brought up is that of student loan debt and the impact that that is having on the housing market with first-time home buyers. What is the long-term impact of this? How significant is this phenomenon where people have such a high income to debt ratio?
Well, it's really very concerning for as households are not forming at the same time. It's going to have an effect of who's purchasing and what houses are going to be built in the future for the young adults versus the seniors in the market.
So what can be done about this?
Banks have to be a little bit looser on lending.
Mm-hmm.
They definitely can't hold them to the 20% that they're seeing nationwide, that they're asking for about 20% down.
Well, you know, it's a sad day when former Fed Chairman Ben Bernanke says, as he did last week, that he was not able to refinance his home.
Isn't that surprising?
So what does it tell us when the former Fed Chairman is not able to get a refi? What is that trend? Are banks just not relaxing the standards enough?
Banks are very tight, and you know, about almost half of the sales nationwide were about 50% were cash buyers. So I think that between that and the fact that banks are holding on tight, it's affecting the millennium.
Now, those cash buyers, overseas buyers, who's coming in with cash? Is it rich investors from overseas?
Rich investors, a lot of families are starting to come from South America, Brazil in particular. Chinese are still flooding the market.
So is the biggest headwind to the housing market the banks not being loose enough on credit, or is it a good thing to prevent another bubble?
It's both, right? I mean, when the banks were very loose and they weren't doing their due diligence, we had a pretty bad bubble. But at the same time, they gotta be able to take some of those restrictions off and be able to lend a little bit easier, especially to the young adults 35 and under. They need the most help.
Well, let's look at what the Case-Shiller Index is telling us, and we are seeing that the rate of increases in home prices is slowing down from 5.6% in July from 6.3% in June. That's the slowest pace since November of 2012. Is this slowdown a concern, or is it good? Is it showing some stabilization?
I think it's great. It's showing some stabilization. It's the people that were afraid to come into this market to purchase something. There's a real relief for them to start studying the market again and come back in and start looking at homes to purchase.
Now, Pej, the big question mark is when the Fed will start raising interest rates. It's forecast to perhaps start doing this in the second half of next year. What impact is that going to have? Are we going to see a flood of new buyers in the first half, do you think?
I think people are going to take advantage of the low interest rates, so you will see a little bit of an increase, but once the interest rates do go up or they do raise them, prices of the homes will start to dip down a little bit too. So there is a little give for that market, and the people that can start to get the loans and put their 20% or 30% down will take advantage of the lower prices.
Now, Pej, you sound optimistic, but earlier you told me that you think in the next year or so we're headed for a big correction in the housing market.
Yeah, it depends with the timing of the raise of the interest rates, and there is a huge rush of home builders. There's a lot of development happening throughout the country, and as more of these homes are going to be flooding into the market, you will see the trend of the prices rising drop, especially if they raise the interest rates. I think you'll have another adjustment.
And now the big adjustment, percentage-wise, very quickly, what do you forecast?
Probably another 2%, 3%.
Okay, so hopefully not a bubble burst like we saw, but a 2 or 3% correction.
Yeah, maybe 5.
Okay.
I think 5 would be great. It will really encourage people to come back into the home market.
All right, I'm going to have to leave it there. Thank you so much, Pej Barlavi.
Thank you for having me.
CEO of Barlavi Realty.